Ghana's 2023 Eurobond rises to the highest in nearly a week after the government pulled a planned 5-year amortizing bond issue. And hundreds of protesters march on the streets of Harare and amid anger over President Robert Mugabe's government's handling of the economy. Plus, Uganda's cabinet agrees to allow the energy ministry to grant 3 oil production licenses to France's Total. Good afternoon and welcome to Business Incorporated, coming to you live from Lagos. I'm Chimeze Obi-Iwagu. We begin in the UK, where the Bank of England has cut the interest rates from 0.5% to 0.25%, a record low and the first cut since 2009. Now, the bank announced a range of measures to stimulate the UK economy, including buying 60 billion euros of UK government bonds and 10 billion euros of corporate bonds. The bank also announced the biggest cut to its growth forecast since it started making them in 1992. It has reduced its growth prediction for 2017 from the 2.3% it was expected in May to 0.8%. Now, the rate decision by the Bank of England is the main focus of the global markets today. Let's cross over to Frankfurt. My colleague there, Annette Wisbach, is on standby to tell us how the markets are reacting to the rates decision. Good afternoon, Annette. Now, how is the market reacting to the Bank of England's rates decision, which of course is the lowest cut since 2009?
Yeah, that's completely true. I mean, the markets here in the Eurozone, like in Germany, are not reacting tremendously. We've seen an uptick for the equity market, but when we look at the UK, we see the FTSE clearly being up by more than 1.5% currently, and the sterling pound has lost in value after the announcement from the Bank of England. Listening to the press conference of Mark Carney and his team, I think the most revealing thing is that he has said this is like the spontaneous instant reaction to the Brexit and potential fallouts for the UK economy. If their assessment is actually going to get worse during the course of this year or next year, they can do more. And I think that's the biggest message to the market. It's not that they are done with it, it's just the beginning in case that the economy might deteriorate. So they can do more on all various fronts. Mark Carney was saying, of course, the governor of the Bank of England, that he's not a fan of negative interest rates, and so far he does not want to have negative interest rates because, of course, they have detrimental effects on the banks. But they could expand their asset purchase program, they could expand their corporate bond purchase program, and also their funding for lending scheme. So they want to show that they are still very potent in tackling the economic situation in the UK.
Now, looking at the series of measures set out by Carney, how will these decisions by the bank impact not just businesses in the UK, but also the Eurozone where you are?
I mean, of course, if the decision from the Bank of England is to inject more money into the system, printing money, which they essentially also said, is the effects are also visible here in the Eurozone or elsewhere, because that money does not necessarily mean to stay in the UK, it can go elsewhere. And I think the lower yields in the UK for UK companies essentially also might mean that yields elsewhere are also driven lower. Essentially what happens as well, if the Bank of England is successful in their aim at reviving the UK economy, that also means positive things for companies who are exporting into the UK, like many companies in Germany, but also elsewhere. Because if demand is low in the UK, that's bad news as well for the rest of Europe, as the UK is a big economy.
Now let's look at the earnings report coming in from Japanese car maker Toyota. Now the higher yen is harming its earnings. Will this also be a problem for the wider economy and other companies?
I mean, of course, 15% of Japan's GDP is made from exports. So we have big names like Panasonic, Honda, and others who are mainly exporting their products. If the yen stays high, that means that those companies have also, or face more and more headwinds, so to say, and will probably share the same destiny as Toyota. For the time being, that also means a higher yen exchange rate, that the so-called Abenomics, that triangle approach from the Bank of Japan and also the Japanese government in order to revive the economy, will have more challenges ahead, because of course they are also banking on a lower yen exchange rate, which is good for the economy, which is also positive to create inflation. The higher the yen, the more challenges they face. But at the same time, one also has to say that the more insecurity we have in global markets, the yen is treated as a safe haven currency. So as a rule of thumb, one can say more insecurity in global markets, there is a higher tendency or a bigger tendency for the yen to appreciate, because people like to flock their money into the safe haven currency. I guess for the time being, or for the last quarter at least, we'll see more corporates in Japan also having difficulties due to the higher yen.
Right, thank you very much for those updates, Annette. That was Annette Wisbach, DWTV Channel's television financial correspondent, reporting there from Frankfurt Stock Exchange. Now we move on now to Asia, where the shares in Japan moved higher after days of losses following a positive cue from Wall Street. Tokyo's Nikkei 225 index rose 1.1%. In Australia, the country's benchmark ASX 200 moved 0.2% higher. In China, the Shanghai Composite closed flat at 2,982.43, while Hong Kong's Hang Seng ended the trading day 0.4% higher. South Korea's Kospi Index was up 0.3%. And Malaysian Prime Minister has launched a global entrepreneurship community initiative on the sidelines of an Islamic forum in Indonesia. The initiative aims to bring together 1,200 global entrepreneurs from 12 business clusters, including biotechnology, food and agriculture, retail and tourism, education, finance and media and creative industries, to generate new ideas and create job opportunities for young talent. Malaysian Finance Ministry Secretary General, who was driving the initiative, said during the opening ceremony that countries moving towards protectionism, as well as other countries talking about tightening their borders and restricting trade, will not benefit the world economy.
The world should not step backward. We are seeing some of the countries moving towards protectionism, and also we have seen the Brexit. There are also other countries talking about tightening their borders and restricting trade. This is not good for the world economy and also trade. With GEC, or Global Entrepreneurship Community, we would like to bring all the young entrepreneurs throughout the world so that they can engage, network, and exchange ideas, and in the final episode can do their trading activities.
After the break, MTN warns of losses in the first half of 2016. To stay with us.